High yield has performed remarkably well since 2008, but Laurent Perusset, director at Barclays Wealth and Investment Management, believes that the game might be over. Laurent, welcome to the studio. First, a little bit of history. Why has it performed so well since the crisis?
But remember, in 2008, we had a crash. Equities turning south, losing close to 50%. High yield following the same pattern, basically. If you look at a US highly index, losing 35% during the period. So that was the loser of yesterday. During the crisis and post-crisis, basically those companies have restructured themselves. They have cleaned their balance sheet, they leveraged their balance sheet. So basically they come out as a good investment finally. And we have seen flows going into high yield since then. And basically investors taking the risk in the high yield space instead of going long equities.
But something to do with the low rates on other debt instruments as well?
Yeah, of course. We had three different steps. The first step was basically after the crisis, investor going for government safe assets and cash. Then investor moved to the investment grade space. And finally, because yield went down sharply, they choose to go for high yield.
But now things are changing. So what's happening to the asset class?
Yeah, basically high yield today are quite rich. If you look only at the yield, we are below 6% today. Mm-hmm. If you look after the default rate, we are between 1% and 3%. Very low, historically low, the lowest point ever. So it means on the default rate, we are very low. On the yield, quite low. It makes the high yield less appealing than yesterday. And that's why today we are a bit concerned. In terms of expected return though, high yield still makes sense. And Barclays believes that high yield is still a good asset to be invested in. We have an expected return of 4 to 6%. So we are not saying that the game is over, but we are warning our clientele and basically pushing them to consider other asset classes.
Well, in the light of what you said, what other asset classes?
Obviously, equities. Why that? Equity is quite funny. If you look after the, let's say, 10 last years, and if you take the S&P as the reference, you have seen the S&P reaching 500 points in 2000. In 2008, again, 500 points. And today, where do we stand? 500 points. In 2000, we had fundamental ratio like PEs reaching 35 times. In 2008, where 2007, the index, the PE index was evolving around 17 times. And today, 14. So it makes it quite appealing. In terms of dividend yield, similar pattern. In 2000, we had the S&P dividend yield delivering a 1.2%. In 2008, this specific ratio moved to 1.8. Where do we stand today? Above 2%, close to 2.2%. On that front, it makes it also very appealing to enter equity market. Basically, equities are cheaper than high yield.
Well, Laurent, thank you very much for joining us today.
Thank you.